Solana was secretly bullish in 2021, even by crypto standards, but trading slowed down in 2022. It's like a crypto wizard had already planned to take Cardano out of its position less than 2 months after it went down for a long time in September. Such a blackout alone is enough to kill most digital currencies for good, but has Sol run out of its bullish juice? Solana is one of the biggest digital currencies on the market, with a total market capitalization of more than $4 billion. Its price has dropped a lot since its peak in 2021, when it was worth almost $250. Despite what it can do, it doesn't have the same group movement as Ethereum. Engineers should build applications on Solana using a more specialized coding language, and this grade will stop them from making great decentralized applications. What does this mean for Sol's future, exactly? Remember that a good piece of crypto experts thought Sol could make a 4-figure profit if BTC and ETH hit 6 and 5 figures, respectively, in the fourth quarter of 2021. However, this didn't happen before you discount. Sol remember Solana had a lot of investors and went from 1.84 cents to more than $250 a TH in just a few months in 2021. It is currently trading at 13.95, but how far will Sol fall before it hits a support that can help it bounce back? Sol's bad mood got worse when Solana's block speed got a new slack. What does this mean for your guess about Sol's future? Solana's personality and use cases will be taken into account in the Solana Value Gauge specialized study. Financial backers trust Solana will raise a ruckus around town before long, as the task is still in its beginning stage. No matter what this reality, here's our investigation of Sol's destiny. Q1 divided by Q2 2022, as you can find in the diagram above. Sol cost is exchanging beneath the as of late broken SR zone and presently has found one more help on the pattern line, pushing the value back to the SR zone. The SR zone opposed the breakout, thinking about the gigantic volume of the bears right now. This is next to the trendline backing's interest strength need to fundamentally push the cost to the potential gain. As per the Solana cost examination, the market is right now in a bear pattern and the costs are supposed to fall. Support levels that financial backers ought to keep an eye out for around $12.04, and on the off chance that these help levels are broken, further misfortunes can be anticipated. Then again, the specialized pointers are additionally showing that the cost might fall further. Q1 divided by Q2 2023 are high certainty that Q1 2023 will break the 2022 ADH, but sales pullbacks could become the most important reason. The AVS's no-go zone is also expected to go away soon, and the cost to retest this continuing ADH before 2023 was skipped. This ADH could be its own most memorable ATH. Q3 split by Q4 2023. It is expected to start out in the red and then come back to retest the AVS resistance turn support zone for the second or third time before it can make another record. Solana ATH to trade above 620 in Q1 and Q2 of 2024. We don't have any real data to use to predict what will happen in 2024, but we can still use Solana's recent track record. We expect a bigger move this year than last year because there are more investors now, which will help Solana's trading volume. Q1 and Q2 are expected to be very bullish, and Solana could trade as high as 1,000 HU. The reversal is also to say that the often broken resistance zones are a big help at the cost of. We expect the price of Sol to drop by 300% in Q3 before Q4 takes over and drives the price up to $1,300, which would be an 800% increase in the potential gain. Overall, Sol is still in its early stages, and top Solana overseers in Solana's guide say it has a lot of promise. Solana is still in its beta stage, but the fact that it has done so well so far says a lot about its future. A negative 2020 Q4 was enough to break financial backers' faith in Solana completely, but Solana showed that its first start doesn't determine its future. Solana has made surprising moves to buy in the past few months. A pattern started on August 13, 2020, when Solana made an intraday high around the $4 price zone. Soon after, it broke through, leaving an interest zone to lay out a higher high around $4.90 before dropping the price again to break the last low as confirmation of a negative pattern and play as the market moved. Advanced, the price found support at $2.20 and $2.50, so it made a sell retracement that first made a $4 resistance zone. This zone proved to be strong by rejecting buy orders to move back to the $2.20 and $2.50 support zones, where the price stayed for a while because it didn't retest the $4 resistance zone. Sol sold and merged at the support zone before it broke out of the zone with a low force and sold at around $2.30, where it laid out another critical hell. The price quickly retested the support with what seems to be serious areas of strength, given that the bullish flooding pattern that supported the short purchase was opposed by the recently broken hell. The buying drive couldn't break the opposition after merging at the support zone. The help skip the cost put every ounce of effort vertically back into the mental blockade during the first 2 days of 2021. After that, the cost had a minor dismissal to the intraday request zone to build up request strength, which pushed the cost to the $3 to $4 cost zone. Remember to keep in mind that the cost was pushed to the $3 to $4 cost zone. The market made this opposition zone on August 13, 2020 and retested it a month after the fact. This was the very zone that got tried once more on the initial 14 days of the new year. After several further preliminaries, the opposition at long last gave way and sent off the cost to the potential game. The value needed to arm itself with day-to-day time period backing to get through a day-to-day base flame framed at the recently found help, which demonstrated that the market producers kept cash at that cost zone and would return to get their cash, which they did. The cost then at that point remembered to the interest zone and accumulated sufficient volume to support serious areas of strength for an energy after it probably relieved and taken out dealers who were expecting a more drawn-out purchase. The interest forcefully pushed the cost to break the long-standing opposition zone, driving the cost as many purchase orders came in hot. This bullish breakout took Sol costs to around $5.60 and $6.50, where it merged with a short rest, abandoning a request blocked flame. The request blocked flame suggested that the market could go back to retest that zone, but that didn't happen. Even though there was liquidity in the zone, the price kept moving up and down, giving the impression of a bullish market. However,